Is the reopening affecting inflation in the US? A lot of commentators of late have been pointing out, and they have been pointing out with substantial and real world evidence that inflation is definitely around the corner. It's probably already occurring. One of the key points they have been pointing out is the fact that a lot of the ports in the US have started to clog up. And the reason for that is because of the reopening right now. Amongst other things, these shippers now have to get on with their activities. Some of them it may not even be that they are carrying goods. They're just simply, getting busy now. It's either probably moving out from the ports or whatever it is, or trying to, and all of these traffic, are affecting the supply of goods. Because you can imagine that a clogged up port or busy rail lines, as the case may be, the rail lines that run from the seaports to cities and towns or states, as the case may be, they're all getting busy now from real hard evidence. Much more busy than it was of late. Going back a few months. When the lockdown was in place, these ports and rail lines weren't that busy, but they're getting really busy now. So even if there's going to be any supply shock from the supply of these goods, the fact remains that a lot of retailers, commercial folk, would, even if they have evidence of this, will begin to hike up prices. Because why would you wait for the price to increase before you increase? So they might preempt and get proactive, even though it's not the best for consumers, but that is exactly what might start to happen, and it may have already started to happen. So inflation is a worry for people who are concerned, market participants, the markets, economists, the Fed, the US Reserve Bank, the chairman. So what we have here is, a piece, an academic paper that was published some time ago. It says supply and demand shock in the COVID-19 pandemic and industry and occupation perspective. So you will find the link to this in the description box below. So it says the COVID-19 pandemic is having an unprecedented impact on societies around the world as governments mandate social distancing and practice and structural care. But in any case, though, it says we estimate supply side reductions due to the closure of non-essential industries and all that. Demand side changes due to people's immediate response to the pandemic. Okay, and indeed, the consequences of it now. We are reopening now. There's another response, another demand side response. It's different from that one that happened when the lockdown was coming into effect. So, and we also have this on CNBC. Says Federal Reserve Chairman Jerome Powell said on Thursday, the 4th of March 2020, or obviously the 5th of March, I think 5th of March 2021, that he expects some inflationary pressures in the time ahead, but it likely wouldn't be enough to spur the central bank to hike interest rates. And he says we expect that the economy reopens and hopefully picks up. We will see inflation move up through base effects. Okay, Powell said during a Wall Street General Conference that could create some upward pressures on prices. Yes, so what he's saying is theoretical, but what I have pointed out, what I highlighted earlier on, is the real hard evidence. So he probably wouldn't exactly know how it's going to happen, but some of these commentators, I will have to name one, that is Bob Kendall. He has a YouTube channel. You try and find him and go and watch his latest his last video, the latest video as of the 9th of March 2021, and see what as of the 10th of 2021. You see what he's saying about inflation. And these are real hard evidences, and these facts support what Powell and other economists are trying to point out. And then we have this also on Bloomberg. It says a burst of transitory inflation, some more probable than the durable shifts above target in the inflation trend, and then unmooring of inflation expectation to the upside. Those who worry about such an unmooring argued Daly should succumbing to the tug of fear, a memory of high and rising inflation, and inexorable link between unemployment, wages, and prices. And the Federal Reserve that once fell behind the policy curve. But the world today is different, and we can't let those memories, those scars, dictate current and future policy. That was more than 3 decades ago. Okay, so I don't exactly know if this supports sufficiently what we are saying, but in any case, those are real, fears. And the other thing about that is then there's also this, the reactionary effect I pointed out by retailers and all that stuff is also one thing. The other one is the reactionary effect of market participants. We have already seen that in how the sell-off in the bond yields, 10-year treasury yields were already affecting the market, especially growth stocks, the sort of stocks that are heavily indebted, that rely on debt to support their businesses or to grow their businesses, grow their innovations and other stuff. So that's one side of it. The commercial side affects you and I and our pockets, and then the other side is for much more forward-looking market, which the equity and financial markets, they have also, they've taken action already. So one can even say whether these inflation expectations have been priced in yet. If it rears its ugly head again, if the concerns about it surfaces again or gains enough traction, I believe the market will, react as well. But the good thing about the equity and financial markets is that when they react, they also move on. That is not absolutely how it affects the commercial market, where you and I go to buy goods and services. They don't, it happens, it stays there, and yes, and it doesn't move on, like shrug off. It doesn't do that. It will remain there for some time, and we will pay the price. We'll pay more for our goods and services and all that. So yeah, inflation might, yes, it might be around the corner. It may have started to occur already. That's our take on this. Okay, so thank you very much for watching this video. If you're new to our channel, subscribe, like, and share. If you're already a subscriber, thank you very much for watching this video.